Ben, thank you very much for taking some time out of your busy schedule to speak with us, myself and Omri. Ben, I think let's dive straight in and get to know you a little bit better about your background, your history, and how you got to where you are today.
Absolutely, and thank you for having me. I've known Omri for some time now. He's a good friend, and I know a lot about your product, and you guys have a tremendous company running there. So to give you a quick background about myself, you can sort of summarize it into three buckets: investment banking, startups, both as a founder and operator, and venture capital. My work today involves investing in growth and late stage companies, specifically in the tech sector. And we focus on a few themes: edtech, fintech, mobility, and vertical SaaS. And we also try to invest in companies that have some sort of diversity initiative as well as part of our thesis. So when it comes to the fund that I'm at today, we sort of have two sides to the fund. The first is a closed-ended fund that we invest out of, and the other side is a fintech platform, actually, that we're launching in the next, I'd say, 4 to 6 months. And that is a measure to, or let's say an attempt to democratize the venture space and allow access to more people that, one, may not know about venture too much, but also two, may not have the relationships to get access to those people.
When I was looking at the website, it really felt, used the word democratize, and it really felt like that explains it very well, that it provides access to a much larger amount of investors than perhaps would traditionally be possible.
Yeah, absolutely. And we truly believe in that, right, as a company, because for so long, the private investment space, so if you want to look at it, there's public companies that you can invest in on the stock market. There's you can do that through Robinhood or Charles Schwab or TD Ameritrade. But the private space is very much a space for folks that have relationships, folks that come from the world of finance, that have the know-how to look at these companies and have the know-how to address certain issues within those companies. And we believe that by providing them our know-how, providing them our relationships, people would be able to, build a more robust portfolio when it comes to their finances, when they include, private companies, especially the tech sector, which is, as we know, taking over the world today.
Yeah, I noticed on the website there was a couple of companies that stood out, which was Airbnb, I believe.
Yeah.
And obviously, and SpaceX seems to be, very topical at the moment. These are companies that you started working with at an early stage?
No, these are strictly late stage investments. So we've invested in multiple rounds of SpaceX, and we invested in one round of Airbnb before they went public.
Okay. So a lot of the investments happen pre-IPO?
Yes, absolutely. Some of them are primaries, which means that we're investing directly in the company as they raise a round, as they raise an official round. And some are secondaries, which means that we purchase shares from other investors that are looking to liquidate their investments.
You go? I go?
You go, after you.
All right. Do you see a difference in the expectation of data and information for private investors between the public markets and the private market? So do they, when they log in, they expect to see kind of a sticker environment where you see demand and supply, or do they expect a totally different environment?
So yes and no, right? If it's there's always a level of supply and demand in any market that you go into. I think in the public markets, it's much more pronounced. In fact, significantly more pronounced, because there's just more liquidity in those markets. And so you see that supply and demand play out in real time. In the private markets, it's, I'd say, slower in terms of how you see it. It's a delayed reaction in terms of supply and demand. And it's also much more relationship-based, I'd say. So, for example, if we are investing in a primary round in let's say a Series C company, and there may be a ton of demand for that specific company, because when an investor looks at it, they may look at the past investors that have invested, and that's quite important when you're investing at growth and late stage, because the seed stage investors, if they're big name investors and they've had a ton of experience in the space, they most likely know what they're doing. And no investment is ever perfect. No investment is ever guaranteed. Obviously, there's always risk to be had, but you're sort of countering that risk by investing with early stage investors that are really prevalent within that specific niche or industry. And so when you look at the supply and demand story, that's part of the information and data that folks look at when it comes to growth and late stage, at least. Because if you have a rock star company, let's say an Impossible Foods, for example, that has had tremendous amounts of investment, so the amount of investment also matters, the amount raised, and what the progress of the company has been so far using that venture capital money. And then you also see that they have some rock star investments on their investors on their cap table. You begin to see that the company is reputable. And obviously for Impossible Foods, you do your diligence, you look at where the products are, what partnerships they have, the brand, their competitive moat, what advantages they have in the market, what specialties that their products are showcasing, so on and so forth, right? There's many data points to look at. But when it comes to the supply and demand story, there may be more demand than supply. And most times there are, right? Most times for companies like an Impossible Foods, many investors that want to invest do not make it onto the cap table, right? They don't get access to the investment. And that's where relationships really come into play in the venture capital space.
So basically there's another layer. If the public markets are very supply and demand and reports oriented and maybe market outlook, then the information around private companies is around who invested, what's the size of the investment, the market, competitors. So it's less of immediate data, but kind of more timeline data. Am I saying it correctly?
Yeah, I'd say it's a bit of both in the private markets. There's definitely timeline data because you're essentially going through the company's story and what they've done so far from the date of founding to the date that you're evaluating that investment. But there is also financial and operational data that we look at. I guess what I'm trying to say is the supply and demand is delayed because again, one, there's more demand than there is supply when it comes to the venture capital world. And so relationships really matter because if you have a relationship with a specific investor or a specific founder, you're more likely to get access to that investment. But also when it comes to the operational and financial data, it's much, not much, but it's less of an established company than a Microsoft or an Amazon, for example, where they've had years on years on years of historical data that has been made public, that has been sort of audited and made sure it's accurate. And there's just a lot more, to say it simply, accuracy in the public markets. Whereas in the private markets, there's more assumptions to be made. There's more forecasting to be made.
And what kind of alternative data do you take into account when you go into such an investment?
When it comes to alternative data, so some of the aspects that we look at, and this is really depending on the company. So let's take an example of a SaaS company. And so SaaS usually is, they're typically an online platform. The client or customer is able to, if not, access the platform online, at least access the company's portal online. And so, one of the examples that I give out here is when looking at the demand of the company to get an idea of where the demand is going, we may look at web traffic, for example, right? If it's a company that has an app, we may look at app downloads and app reviews. We may go on to G2 or Capterra, some of the big review sites for technology, and look at customer reviews there, and really read into what their clients are saying. Other times we interview customers ourselves and kind of dig into the details. And there's many times where we interview employees and executives because we have relationships with those people, and they're able to provide us insight. And they certainly don't provide us with data or financials that they're not supposed to provide, because that would kind of put them in trouble with their own company. But they provide as much insight as they're able to as they're allowed to, I'd say, into the company's operations and where the company's going. And so those are some examples of the alternative data that we use internally here at MarketX.
What about a company like SpaceX that's not a SaaS platform and is quite, pardon the pun, out there? Is there alternative data that you can utilize in order to provide your investors with some insights?
I'd say yes and no. I'd say you could look at alternative data focused on government contracts, for example. If you consider that alternative data, I guess let me ask you, in the terms of SpaceX, what would you consider alternative data? Just to be specific.
I'll define it for you. Alternative data is any information that's available that is not published by the company itself in order to make business decisions.
But the challenge there is that it's not a platform. It doesn't have its customers there aren't many customers. How do you understand the sentiment of the company? How do you understand its brand reputation? I think it's very different to a consumer. It's very different to a B2C or a B2B based business. I think that's where the challenge may lie.
Yeah, and that's there are challenges there for sure. So you're absolutely right about that. And in the sense of the definition that Omri has given me, I'd say some of the alternative data that would be relevant to SpaceX would be, kind of going onto the government websites and kind of checking what public contracts the government has given SpaceX. Although I think SpaceX makes that information public anyhow, because it's part of their growth story. But also looking at, the number of employees on LinkedIn, how that has grown or shrunk, for example.
The type of employees, by the way.
The type of employees is pretty important. It kind of tells you, especially for these very high tech, sort of frontier tech companies, looking at, as Omri said, the type of employee is also pretty important, because it tells you where the company is going sometimes. If they're building new products, if SpaceX hires 10 new AI-focused engineers, they're including some sort of AI play into their company, into their products. Those I would say are good points of alternative data when it comes to a company like SpaceX, which is quite differentiated from other tech companies. It's more innovation than tech, I'd say, in the typical sense of tech. And I'd say it's more frontier technology than it is, the everyday SaaS or fintech or insure tech that we look at.
Do you see that there's a difference between the three types of investors that you mentioned in the data that they require? Is there a difference between the institutional investors as opposed to the families or individuals? Do they do they need different data points in order to make a decision?
Yeah, 100%. I think the more sophisticated investors, the institutionals, do require more data, because that's what they're typically used to in the public markets. They have their Bloomberg terminals and their fact sets, and they're able to sort of access many of those platforms to be able to acquire that public data and make sense of it. And so they look for similar data sets in the private markets. I don't think there will ever be a complete data set, when compared to the public markets, but as close as possible, they certainly look for it. And then, because they don't have that complete data set like they do in the public markets, they do require alternative data to make sense of what the company's doing and the company's story.
Do you think the data that you provide the investors gives you an advantage over other competitors in the market? The ability to, especially I think with the fintech platform that you mentioned launching soon, is that what differentiates you in a crowded market? Because I think as we spoke about in the last episode, there are a lot more private equity companies. There's a lot more demand now for investment. So does the quality and the level of data collection that you're doing give you a competitive advantage?
Let's actually take a step back and kind of explain why these investors are looking for more data in the private markets, and why there is more demand in the private markets. So when we look at the public markets today, the technology assets are, let me call them technology investments, are highly overvalued. We've seen their valuations come down significantly over the past few months, and many investors are sort of moving from growth investing to value investing, and moving into more traditional industries such as traditional finance and industrials, but also I think for some time now there's been a realization that investing in a technology company before they go public is really where the most gains are at when it comes to ROI. And many of the folks that are in the investment space today, whether it is on the institutional side or on the individual side, they've come to that realization. One, because the internet is vast these days, and there's a ton of information about this today, and there's a ton of blog posts and news articles about the returns that are coming from the private technology investing space, but also there's just many more data sets around it as well, so folks can see for themselves what those returns are. And as a investor, you typically want the highest return for the least amount of risk taken, and so that's where the shift to private investing comes into play. That's where the demand comes into play. For the investors that will be using our platform, one of the things that we want to provide them is information and data to help them make decisions, and also to educate them as well. So one of the mainstays of the platform is to essentially allow many of these investors to not only look at the general company information you would find on a Crunchbase or on a PitchBook, but also provide them with detailed insights that only a person with my background may have, only a person with my CEO's background may have. We've worked through multiple industries, and my CEO and I have similar backgrounds in terms of investment banking, startups, and venture capital. And we've just gained a perspective and understanding of each industry and how to look at each company, right? So when I look at an investment and diligence an investment, I'm able to look at it from both a financial perspective, but also from an operational perspective, because I built startups in the past. I've worked at startups in the past, and I'm able to look at them as a person in the seat of the founder or the operator. And I think many investors out there don't have access to those glasses, if you want to call them, because they haven't gone through that experience. So that's something that allows us to differentiate ourselves in the market and provide better investment opportunities, but also better data around those opportunities to our investors.
You talked about ESG in the beginning of our call, and that's another layer today. First, the first question is around it is it, do you think today it's directly correlated into profitability, valuation, growth, or is it nice to have? Where do you see it kind of in the movement?
Yeah, no, I love that question. It's a big I'd say like passion of mine to just really focus on this, because if you look at investing in general, not just in the private space but also in the public space, investing isn't just a financial activity. It's a social activity, right? And what I mean by that is you're investing in trends, in human psychology and human habits, and overall, global human activity. And all of those things that I just mentioned stem from, individual day-to-day, human actions, right? And culture, and how that culture is interpreted, and how people kind of, view each other and view other cultures, and so on and so forth. And I hope I'm making sense with this. I'm not just babbling, because in my head it does make sense. So let me get to the conclusion that allows you to sort of kind of get a vision of what I'm talking about. If you're looking at sort of investing in a specific space, we have, let's say, a population of, I don't know, let's just assume, for the sake of example here, 20% African American in a specific industry, and we're able to sort of kind of realize that the psychology of that industry is different, right? It's best understood by somebody that has a similar psychology. And so investing in ESG is tremendous because we need diversity everywhere, right? We live in a diverse global world, and I think people that don't realize that need to wake up and smell the coffee at some point. But it's also smart economically, because if you invest in a company whose founders are African Americans or Latinos or underrepresented founders in general, or whether they're females, right? And there's a story, in fact, a perfect story about a female founder who, after becoming pregnant and giving birth to a child, she was a consultant for a very long time, and she didn't want to go back to her corporate job. She wanted to start a company of her own, and she started a breast pump company, and she took it to VCs who in those days, and it still is the story today, but it's improving little by little. Many of the VCs are males, they're men. And so, when she pitched her idea and her company to those VCs, and even though her co-founder was her husband as well, many of the VCs did not understand what she was building. Because being completely honest with you, as a man myself, I would never understand the operations of a trust fund, right? So when she began pitching it to female VCs, they started to see that, hey, there is a market for this. There's a real story behind this, and we should invest in this female founders company. And so this is where diversity comes into play. It's perspective, it's understanding of what the company is, who the founder is, and what the company is building, really, more than anything else.
We are actually going into ESG as well, in ESG data. That's our playbook around this one. Two things that I think are interesting. One, in terms of governance, when you see, there's a lot of public data around governance, and I think today you see companies that they know that that investors are looking at it. How much the CEO makes, top 5 earners, the contract that they're signing with the employees, what is allowed and not allowed, and everything. I think it's important. First of all, this is the G part of it is the old school part of ESG, the old school, but it's important because people are looking at it. Yeah. You're not, even if there was kind of a notion that you could do anything, right? There's a lot of examples that are going to court, but also a lot that are not going. And even if you're thinking of the mere fact that you're thinking about it as an investor, I think already kind of airs everything out. And the second thing around ESG that I think is interesting is when you look at companies that are doing, software, their net gain could be, revenue, the top line is great and the net gain is awesome. But end of the day, all of the bottles are ending up in the India coastline. And then you have to clean it up and you have to recycle it. And that's taxes that the public is paying. So I think this is the view, first of all, public data can bring in as a general idea, but as that investors are looking at. So I totally agree. Around the social, I totally agree. I think that the representation is super important.
Yeah, and it's also, I think it's also a generational aspect as well. The newer generations, the millennials like us, and then generations younger even, they really care about social responsibility. Whether it's environmental, whether it's diversity, whatever it may be, they, I should say we want a better world, because we're seeing the effects on the environment. We're seeing the effects on social constructs, and they're not good. They're not playing out to our expectations. And I think in this specific generation, the generation of entrepreneurs, the generation of innovators and game changers, there is a prevalent thought and idea that you can change the world, right? And you don't have to build this giant company change the world. It could be with your day-to-day purchases, right? So you can vote on whether a company that's dumping oil in some river in the U.S. Or dumping chemicals there is getting your dollars. Or you can choose to go with a B Corp, a certified B Corp, that is focused on ESG. And even if their product is a couple dollars more expensive, you know that in the long term, this is more helpful to the environment, society, and ultimately yourself.
Yeah, I totally agree. I think this is what we'll see, as far as I understand, in the motions that are going through the data market, is that the valuations of companies are going to be affected directly just because of the supply. The first reason is supply and demand for investors, and that's the valuation, not even the revenue. And the revenue is going to hit because of the millennium part that you mentioned. I think this is definitely where the enterprise world is going.
Yeah, I agree. And at the end of the day, like the number one driver of any company is the consumer, right? That's where it all starts. Every company is trying to serve a consumer, and whether that consumer is an individual or another company, if it's a B2B type of business. And I think as our generation, the millennial generation, continues to take over the economic reins from the baby boomers, we're really using our money to vote more than anything else. Whether you are an executive at a company looking to purchase software and you figure out that there was a scandal within one of the vendors that you're evaluating, you decide against that because you don't want to be part of that story, right? That's like one major example of how consumers are really driving change. And at the end of the day, consumers drive revenues and profits, right? And so that is also going to affect the investments made in that company, whether it's public or private as well.
I think when you look at that kind of data, by the way, and tie it back to ESG, if in the past we would look at prices as an option to make a bit, today they look at the ingredients as well.
Yeah,
right.
Absolutely.
I think this is kind of what we see. It's like the millennials, and I'm joining the club. The millennials are looking at everything, and I think it makes sense. It's kind of, we're not kind of shying away from confrontation that was in the past, and I think this again ties up to data and ESG. It's like the visibility, the transparency, the responsibility around it. I think this is kind of at least what I see. These companies are, I don't know if the market is forcing them. I think it's partially that, but also people that are growing with social awareness as well.
Yeah, I agree. And especially when it comes to transparency, I think transparency is being heavily rewarded in the market.
I tend to agree. I think at least that's what we try to do, is when you try to act, there's no reason to hide anything if you're doing it right.
Yeah, I mean,
Simple as that.
If you're a company that hides this information, you mentioned ingredients. For example, when I go out and buy something, and I tend to think of myself as pretty health conscious. When I go out and buy something, I look at the ingredients, and if the ingredients are kind of all labeled as and bucketed into a single sort of category, and they don't give the details about what's included in that food product or that supplement, I typically don't buy that, right? Because you really want to know where the product is coming from, how it's sourced, but also what you're consuming, and that doesn't just go for food and supplements. It goes for technology and everything else as well. I used to work for an HR tech company, and one of the major messaging around the company was transparency of how transparent we are with our customers, and especially when it comes to product and customer service and pricing. You kind of want to know as a customer or even as an investor what is going on in the company, and if the company begins to hide something, whereas in the past that may have been okay because people of that generation had the psychology of the company kind of needs to protect themselves or whatever. Today it's very frowned upon. We as a generation, I think we would rather have a company tell us they messed up versus try to hide it and sort of fix it, quote unquote, because there's just trust in the equation, right? And I think trust is quite an important factor when it comes to many of these ESG stories. Very
interesting. Yeah, trust is part of the equation. That's definitely, I think, a big part of it. Cool. Phil, you have anything else before we let Ben actually go and invest in something?
No, I think it's a very interesting subject. I think, it's a process, right? Well, it'll be interesting. As a consumer, you can see it taking effect, the sentiment towards, big social media networks, or even seeing ingredients being more like displayed very obviously on products with high sugar or high fat. So I think, it's a process, and it'll be interesting to see how the investment community adopts this over the next few generations, or what comes after generation X, and how that develops even further to become more conscious consumers.
Yeah, I agree, Phil. I don't think I think it's going to be driven by the consumer base versus the investor community. There are, I'm not going to say there aren't investors out there that are driving this. There are, but I think the majority of the trend moving forward will come from the consumer base, because again, they're voting with their dollars, and I think that's where the economics come into play, and where sort of investors' eyes are focused on is how much money is this company making? Is it profitable? And again, there are investors out there that do take ESG seriously, do take diversity seriously. I think the majority are still yet to get there. So the major driver will be the top line revenue and profit.
Ben, thank you very much. It was a very interesting conversation.
Thank you, my friend.
And we'll let you go and do some investing.
Absolutely. I hope you guys enjoyed this. I certainly enjoyed it myself, and look forward to staying in touch.
Right. Thanks a lot, Ben.